So, ladies and gentlemen, we're going to move directly to the last roundtable. Again, I haven't seen the table up front, so the round table will take place without the table. But it will be an interesting one nonetheless. We will be talking about VAT and regulatory topics with regards to digital asset trading and staking services. And to talk about this, we will have 4 experts from various backgrounds: legal, trading, banking, and advisory. Let's please welcome Thomas Linder from MME, Fabio Andreotti from Bitcoin Suisse, René Langer from Luzerner Kantonalbank, and Kevin Leuthardt from threek advisory. And one final note: after this panel, there will be a very important thing which you will not want to miss. Please pay attention. There will be lunch, and it will be served outside by the main entrance, just to keep in mind. No pressure.
Thank you, Ian. Ladies and gentlemen, welcome to this roundtable hosted by MME. My name is Thomas Linder. I'm a tax partner. And as said, so we're talking about digital asset trading and staking services, and we will focus on regulatory and tax pitfalls. So with me is René Langer. He's head of trading services at Luzerner Kantonalbank. His team is responsible for the execution of exchange-traded products, and he's the project lead for the technical implementation of the cryptocurrency in the bank. Then we have Fabio Andreotti, Deputy General Counsel of Bitcoin Suisse. He did a PhD at the University of Zurich about regulatory qualification of taxes. Very, very interesting. And finally, we have Kevin Leuthardt. He provides financial CFO advisory services, is a board member at KAIF Foundation, was previously with SAFE and with RVIF, and we're actually co-chairing the Tax and Accounting Working Group of Crypto Valley Association together. So thank you all for coming, and let's just start with the trading topic. So René, maybe you can just very shortly tell us what is actually the service offering at Luzerner Kantonalbank for trading.
Yeah, we started in March this year with our offering. We do trading and custody by ourselves. We will introduce the transfer in and transfer out of cryptocurrencies through the year. This is quite significant for a cantonal bank or a traditional bank. We focus on the main tokens, and what's really special for us, that we don't use a white label solution. That means that we do self-custody by our own.
And if you, so far I think you have Bitcoin, Ether, USDC. So if you want to list a token, what are the internal procedures that you follow from a regulatory and tax perspective?
Yeah, we have a token listing process in place, which really is important, and we also use the BCP framework from MME, which is a legal risk and also a tax assessment. And one of the first steps is the question whether the utility token or the governance token could be subject to value-added tax, since it was kind of surprising for me that a regular trade or a regular transaction could be really relevant for value-added tax. So it was kind of a horrible scenario if we would recognize this afterwards. So that's why we have a dedicated step in our process where the accounting specialist takes care of that. Actually, we have right now a tax ruling, what we are going to start with the Federal Tax Administration in Switzerland for a certain token. So we take that really seriously.
Yeah, so most of you, most probably, you know the FINMA qualification of tokens, right, with the payment utility and asset token. And for VAT, so for tax, there are the same categories, but there are different definitions. So the federal tax authorities use different definitions than FINMA. So if FINMA comes to the conclusion this is a utility token, it doesn't mean that for VAT it is also a utility token, because the definitions are different. And the consequence would be utility tokens are subject to VAT. That means every trade would be plus 8.1% if you sell a token to Swiss people. So I don't think that customers would be very happy if you say you need to pay $100, but actually it's 108. So Kevin, maybe what's really the difference if we look at the utility token and the specifics from a VAT perspective? Which ones are taxable, which are not non-taxable?
Yeah, and I think you just described it very nicely, this, I would call it conundrum, where you want to achieve, for example, certain outcomes from a regulatory point of view, but this might actually run against the target, the outcome at the tax level, at the VAT level. And as I said, right, we have like the same categories, but like there's kind of something, I think it was 2019, right? The SDV, the SFTA published their VAT information on the token categories. At first sight, they look very similar, right? You have, again, like the utility token, the asset token, the payment token. But yeah, I think there's some nuances, and I think particularly it changed also over time how the SFTA, so the SDV, looks at these categories. Unfortunately, not much has been really publicly communicated. So I think especially for you, right, in your daily practice, you of course get across these fine nuances. For outsiders, it's a bit more hard to grasp. And I think essentially, I think they really challenged. In the beginning, everything was basically a utility token for VAT purposes. As soon as you had like a governance right attached to the token, as soon as you could claim, well, there's a platform out there, you can use it as a native token on the platform to get, for example, like, I don't know, a decentralized storage service. This was actually pretty much all accepted in the past as sufficient to provide for a utility token categorization under VAT consideration. I think this changed pretty drastically. I think they really want to see a clearly identifiable service relationship. So a clear understanding of what is actually exchanged. So what's the service? So a really narrow definition. And if that does not hold true, and especially if the tokens can be used in very various ways, they actually now go more into the direction of either saying, well, you're actually a payment token because it's somehow used as a means of payment for various purposes, or if that does not hold through, it's like this value voucher concept. And the striking difference, and I think that's probably what's here really worth to also emphasize, particularly from an issuer's perspective, like Swiss Crypto Foundation and Association. If your token all of a sudden gets classified, no longer, for example, classified as a utility token for VAT purposes, you might actually lose the right to get the input VAT refunded in full or in portion, which, if you look at how many structures are implemented, many projects actually import a lot of services from abroad. So when you now can get back the 8.1 import tax or acquisition tax, it's pretty decisive. And like if you think about a runway or burn of 10 million, like really large projects a year, we talk 810,000 Swiss francs to have or not to have. I hope that helps as a first perspective, and also, like I think, as a first description of the conundrum between, I think, the regulatory and the VAT perspective. I think it's important to emphasize that we would all appreciate if the SDV comes up with updated, clearer, I think, information on how they look at the tokens.
Yeah, so it's very important that you do the analysis from both sides. So you do the regulatory analysis on one side in order to figure out, are you a security, yes or no? Are you subject to AML, yes or no? Or are you a utility that is not subject to any regulations? But then on the other hand, you need to do the VAT qualification in addition, separately, because there are defined utilities, as you said, they are subject to VAT, and there are kind of undefined ones that can be used for different purposes, and they are then again treated the same way as a means of payment, so it's not subject to VAT. Fabio, what procedures do you follow internally to kind of solve this situation?
So I'm not a tax lawyer, but from what I heard from within our institution is that, of course, the tax, the maintenance of the token universe for tax purposes is very heavy on the resources. That's a lot of work, and of course, it's not. Of course, it scales on the knowledge side, but it doesn't really scale on the other aspects of a larger token universe. For us, as now speaking for the legal department of Bitcoin Suisse, for us the security, the legal classification of tokens is especially important for regulatory reasons. We at Bitcoin Suisse we do not trade securities, so that's in German Effekten. We have to ensure that all the tokens that are listed and accessible to our clients are not securities. That's one thing, and of course I think this is common sense. You have to ensure that the project you onboard in your trading and custody universe is safe, secure, technically secure. You have to do the due diligence on that in that regard as well.
Talking still about trading, what are other relevant topics? So maybe outside of token qualification. So I could imagine there are counterparty risks, there are kind of best execution rules, some code of conduct that you need to follow. Maybe you can tell us a little bit from your practice how you manage such topics.
Yeah, I think best execution is a really relevant topic. That's why we work with 3 market makers. That means that we don't really rely on one exchange or one counterparty. That means that they are always in competition. So that means that the best price wins on that. Nevertheless, it is so that the Swiss regulation says that cryptocurrencies are not financial instruments, especially around the Finanzdienstleistungsgesetz, the FINSA, also relevant to the Finanzmarktinfrastrukturgesetz, this is the FMIA. So that means that best execution is not really required, but nevertheless we take that really seriously. And what's also important is counterparty risk. As we know in the market, the FTX event was quite horrible. That's why we don't work with exchanges directly. Usually you have to pre-fund your trading activity at the exchanges, and this means you would have counterparty risk. That's why we choose to work with market makers, and with them we don't post any collateral. So that means that we can really trade with them on a credit line, which is pretty cool for us and pretty significant. Nevertheless, since we are trading crypto against fiat, that means that you still have a settlement risk in place. Settlement risk means that you, compared to traditional finance, you don't have that payment versus delivery function, which is really supportive in the SWIFT network. That means you always be unsure whether the fiat is paid first or the crypto is paid first. So we need to apply for a credit line. So that means I have to go to my management and apply for credit lines. And this is usually a topic, since what we see that a lot of the counterparties we deal with are not fully licensed as brokers or banks, and usually they don't have that a large balance sheet. So for us it's kind of tricky to find the right counterparties to deal with, and I would be really grateful if the market would evolve that more and more regulated entities come into the sector, and I hope this will change over time.
Yeah, maybe to add on that, I mean, I fully agree with René. So Bitcoin Suisse has implemented a multi-exchange setup, and that basically means that we trade through a myriad of exchanges, including centralized exchanges and OTC desks, trading desks. And what we actually do is we have a credit committee that regularly meets, that goes through the counterparty risks on a regular basis, that does those reassessments, and then limits ourselves, basically, the trading of certain tokens, but also with respect to certain counterparties, limits ourselves and basically introduces thresholds that cannot be exceeded for a certain counterparty. But overall, I would say we've seen in the past professionalization of the space. There is, for example, you see that prime brokers are emerging and offering very similar products and services that as the ones we already know from TradFi. So I think a lot is going on. Many more things will probably come up, but overall I agree with you that the counterparty risk management is and remains one of the key functions of every crypto broker.
What I also like to emphasize, since it's also a topic, it's in Forex trading, maybe some of you guys are also engaged in that. We have here a central clearing counterparty, which large bank use, which is the continuous linked settlement network, it's the CLS, and which reduces or completely eliminates the settlement risk. This is something quite interesting, which might come up in the future for that sector, and I think the larger institution will focus on that. But I think as a precondition, we must solve also the problems about the capital requirements in place, which are set out by the Basel Committee. That means if you would have Bitcoin on your balance sheet, for example, and as a market maker you have to have that on your balance sheet, you would need to have the same amount of capital in place for that amount of Bitcoin. Yeah? Imagine that, and this kills a lot of the activity or the activity of regulated companies, and that's why also a lot of market participants try to be unregulated. So I think this is a really important topic where regulators should also focus on that the rules should be inclusive, not exclusive. And we also in the bankers, Swiss Bankers Association, we will engage in that process to try to convince them that these rules are not working as they should be.
How do you see the role of unregulated market makers, bots? So I see there a risk of market abuse, insider trading, etc. So how do you see such risk?
Yeah, I can respond to that question. I think from a project's perspective, not necessarily from a FI, a financial institution's perspective. I think it's certainly something we should have all on the radar. Maybe also just to follow up what you discussed before, over the last couple of years, I think we definitely have seen a clear professionalization of the sector. I think more and more also like traditional players joining, I think, the activities, I think bringing in a different level of professionalization. And I think, yeah, just following up on the question, I think it's super important. I think we have, for example, MiCA around the corner, so to say, which introduces the concept of market abuse also for non-security crypto assets, which I understand under the Swiss rules, right? Like as long as you're not a financial instrument or a security, these rules are kind of not relevant. So it's more laissez-faire, and I think it's important because I think if you have been involved in projects on the project side, you definitely have noted around listings, around certain market events. There's some fun patterns to observe, and I think it's also important that the industry in this regard grows up, gets more, matures, because I think this is ultimately also a question of trust. Because how shall we reach mass adoption if we cannot really trust how this is done? It's my personal view also here.
Yeah, I think this is really an important remark, since imagine that Luzerner Kantonalbank could be a counterparty in a DeFi trade, where afterwards it came out it was market abuse. It's really a horrible event. Let's imagine that. So, and if we don't have these rules in place on a DEX level, so we as a bank have to be really sure that our trading behavior is compliant. But how can we be really sure if we are trading on that, would be trading on that platforms, that the trade has had a good price discovery? Let's say it in this way, a good price discovery.
Yeah, and also I think just on the matter of price discovery, I'm, for example, pretty critical about the recent developments in the industry around the topic of KOLs. I do not want to put all of them into the same basket, but I think some of them definitely engage in harmful practices. If you just go also by the text of MiCA, for example, right? If you just generate a hype just to drive something in the short run, to get some artificial activity in place, what's that? I think, yeah, I'm not a lawyer, but it smells at least very strongly like potential market abuse.
Yeah, I would agree with that.
And you're a lawyer, right?
Yeah. I would say a lot is coming together now. Things we are very familiar with from TradFi, especially you mentioned the best execution policy, of course, extensive conflicts of interest policies as well. But then also with respect to market integrity, market fairness, I think the MiCA will probably set a first milestone, and it's not everything good about, I think, the scope of MiCA. There are a lot of questions. We'll probably talk about it when we come to staking, but maybe just one remark. MiCA would, at least that's the interpretation of ESMA, would also be applicable to consensus mechanisms. So that basically means that staking service providers or miners that include transactions in a block could also potentially be subject to MiCA market abuse regulation.
Yeah, let's just jump to the staking topic. Last summer there was a big fuss here in Switzerland about the FINMA kind of regulating staking activities. Everything kind of is more or less solved in a good way, but maybe you can shortly summarize what was the topic and what is the kind of, what are the important kind of steps that you need to take if you want to provide staking service.
I think we've already heard it this morning on at least one panel that staking was a hot topic. So it was summer 2023 was a hot summer for the Swiss staking industry. It was overall a turbulent year. FINMA announced that it intends to consider custodial staking services, at least certain types of custodial staking services, to be bank activity. So basically, they argued that certain types of custodial staking services are not in compliance with safekeeping requirements that would make crypto assets bankruptcy remote. And FINMA announced that to the industry. There was heated discussion, public discussion. Many papers were written, and then in December 2023, I think that was the lucky day the industry has hoped for, and FINMA basically reversed their policy, but at the same time they also tightened, and I think for good reason, they also tightened investor protection requirements, customer protection requirements with respect to staking services. But basically, staking is now not subject to having a bank license. You can still offer it as a non-bank, but you have to ensure that the staked crypto assets are bankruptcy remote in the event of bankruptcy.
There's kind of, as I understand, so you need to make sure, so there's to kind of manage the withdrawal key and to be able to kind of withdraw the funds without that, especially if you use service providers that run validator nodes, etc. Right? So the validator key you might then transfer to the validator node, but you need to make sure that you're still in control of the withdrawal key.
Yeah, that's exactly right. The thing with the staking guidance from FINMA is that it's very Ethereum specific. That's I take an issue with that, but obviously at least the Swiss staking industry was very interested in a solution to Ethereum staking. So that's explainable, and we can accept that. But I think the key differentiator is who at the end of the day has control over the fate of those staked crypto assets. And if you can ensure that you keep and maintain control on behalf of the customer, and you comply with all the other requirements, which are not a few but quite many, but then you are still allowed to offer those staking services as a bank without the extra capital requirements, and as a non-bank without the banking license, basically.
So maybe I jump in here. Kudos for you, Fabio, and your team. You did an amazing job. I've seen this in the background in the Swiss Blockchain Federation. Was really great, and the whole industry went together. Also, we also within the Swiss Bankers Association, we also participated in let's say workshops with regulators, and as a whole crypto industry, we've kind of made it. But nevertheless, it's really it was really a hot topic, and it's still a hot topic. It's also the capital requirements topic is still in that, and I would really would like to emphasize, since if staked crypto assets would be treated as public deposits, that really means we would have them on our balance sheet. And if we would have them on our balance sheet, then these capital requirements would apply. And to be really clear for you guys outside, that means if you would have 100 million in staked crypto assets, then we would need to reserve 100 million in capital for it, just to make it clear to outside. So, and this is really, it would have killed the staking case within Switzerland, to be really clear and honest. Yeah, and it would be a really large disadvantage for the whole industry within Switzerland, also on a more broader or global basis. So, which was really a great effort, what we have done. So, that's why I also would like to emphasize on that. And there are still some unclear topic since the staking guideline said that if you would like to do direct staking, what we would like to do, that means that we would like to have a withdrawal key. It says that we as a bank has to do also staking by ourselves. But what does that really mean? Do we really have to run our own validator node, which is really kind of unimaginable for a Kantonalbank to do that? So we need to have a solution in place, or it's still for me a bit unclear, since we have just about to start the staking project. But for us, it's really also important, since we would also love to provide this service to our clients, since I guess in 1 to 3 years, every bank or entity which offers crypto custody needs to have also a staking offering, since it prevents also our customers from a dilution of a share of a network. So it's an extra reward and kind of a must as a crypto custody provider.
It's my observation as a client, actually, that it seems to me the staking offerings with the different service providers it's still very intransparent to the client, at least. What is really happening? Who is running the nodes? Where is my crypto? What are actually the legal agreements? Is it, do I run a node? Do you run a node in my name? Is it someone else? Is this observation correct, that there is more transparency needed?
I mean, as a customer, I think you can always improve on those things, be more transparent and disclose certain things. In addition, of course, there's always a trade-off from a business perspective. At Bitcoin Suisse, we run most infrastructure ourselves, so that's maybe a bit different. But of course, also we see that there is specialized infrastructure service providers emerging and being very efficient because they have scale and so on. But I agree with you that that it might be interesting for the client, of course, to know where exactly is that client's crypto asset staked. Maybe you can provide the client with the address. That's usually possible depending on the protocol. There are probably technical means that would provide the client with more information that is valuable to the client, especially institutionals, institutional investors, and so on.
In addition to the FINMA discussion, there was also a Federal Administrative Court decision with regard to the VAT treatment of validating staking. So maybe, Kevin, you can shed some light on that. That was all, or it's still some unclear how this is applied in practice, right?
Yeah, absolutely. And I think probably the most significant, change it introduced is really that it got confirmed that, let's say, when it comes to staking rewards, that from a VAT point of view, there's a clear differentiation between block rewards, which are out of scope of VAT, and the transaction fees, which are essentially like a compensation for an electronically supplied service. That was not clear before, because I think the original, or the still actually published VAT information does not detail this case, where you basically have also like a scenario where you can have basically empty blocks. And this was clearly confirmed that if you, I think, provided that actually it's also technically possible, I think that's probably a fair caveat disclaimer we need to put, that this is not a single supply of service, right? It's not getting combined, it needs to be looked at separately, which sounds great at first sight, because I think, if you run like staking activities, you should now really make sure that your accounting department gets the accurate data input. So what kind of transaction fees have you actually accumulated? What share of block rewards? Yeah, opening here the bracket, it's not always so easy to get this data, depending a bit on the chain you're operating. So that's also, I think, an accounting reporting challenge, but at least it gives some perspective. I think what's also important to mention, it also opened up new discussion areas. I think to keep it, simple and brief, probably around the question, what does it take that the STV looks at the crypto network in a way that they're convinced that it is truly decentralized? The court ruled, provided some guidance by just, I think, looking at the distribution of the tokens available for voting. But I think there's, of course, a big question, is that now the total supply? Do we just look at circulating supply? What if there are some maybe clusters between, in sense of like you have a foundation, you have DevCos, you have maybe other related entities, there's some grouping. I think there are many discussions, and of course, like if depending on the way it is interpreted, they can have a sharp impact on your VAT bill. That's why I think we need to keep pushing, and I think I can speak for our working group at the Crypto Valley Association, right? That we try our very best to educate the authorities, to share our 5 cents, because that really matters. Because I think, to me, this VAT discussion, to really put it very frankly, we do not have to move forward in the regulatory sphere and be very attractive if we cannot get fouled in the VAT arena. Because, yeah, and I think we should keep pushing, educating as much as we can, because I think there's still a lot of discussion points. I think goes hand in hand what we previously talked about, token classification, right? Get an updated communique information status, also like in respect of this recent court ruling.
Yeah, the main topic with VAT is that you always need a counterparty in order that the transaction can get taxable. So you need a counterparty that pays for a service, right? And that's the discussion where in decentralized ecosystems, is there a counterparty? So now the court kind of decided that the decentralized blockchain network is not considered a counterparty. That's why the block reward is kind of tax-free. But on the other hand, they also decided that the transaction fee knows a counterparty because someone paid it, and that results in being a VAT-able transaction. And then they say, and you need to know where the user is resident, because that's important, because only Swiss-based transactions are subject to Swiss VAT. And that's in practice impossible to know, right? And there are also other viewpoints that they actually say, why can a network not be a counterparty? Because we know which network, there's only one Ethereum network, there are no difference. You always communicate with the same set of nodes, and they're performing certain activities, and you pay them that they do it. And so these are here the topics.
And then I think around absolutely, like, very important, I think, additions you have rendered here, because, like, for example, with the single supply perspective, right, it's important that you have basically the same recipient. And of course, that could be argued theoretically if you have a certain level of centralization, that you say, look, this Swiss foundation, this Swiss association is basically, yeah, the recipient of the services, and at the same time also, like, could be argued the emitter of the service, but that's, yeah, where it gets also a bit like blurry and fun to follow these discussions. But yeah, I think it can be quite, in my view, like, we need to really closely follow up these discussions, because, like, if this holds up, right, we should kind of avoid that we have, like, ecosystem organizations here in Switzerland with massive or significant, I think, token holders, which I think historically, right, this was set up in a way as a hub. Basically, you had like this shareholderless, memberless foundation, for example, who has like a large pile of tokens with the mission to eventually distribute these tokens over time as part of the decentralization roadmap. But now, of course, like, if you cannot anymore, as a possible outcome of this discussion, allocate maybe just like 20% of the tokens to Swiss foundation, what do you do? Like, do you need to have like dual structures, more complex structures? Do you do like more large airdrops? What does this mean for the sell pressure in the market? So on and so on. Like, it will be, that's why I believe, like, it's equally as the regulatory discussion was taking, we have still, I think, a lot to clear. And in that sense also super exciting, but we need to be careful that we don't get, yeah, disadvantage generated out of this.
Super, thank you very much. I think lunch is approaching, everyone is hungry, and that's why we finish now this panel, and gute.